Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
I know Ed Ludlow and Jay Goldberg are watching their screens closely. I want to bring both of them in as we do await these earnings. Ed Ludlow is the co-host of Bloomberg Tech on Bloomberg TV. He joins us from the San Francisco Bureau. And Jay Goldberg is with us too. He's senior analyst, semiconductors and electronics at Seaport Research Partners. He's still the only analyst on the Bloomberg terminal who has a sell rating on Nvidia. Jay, is it lonely in that corner?
It's getting less lonely by the day.
Is it? How come?
In Q4, November, December, I had a lot of newfound friends.
Okay.
Right?
Okay. Well, we'll see.
I don't think it was so much me being right. It was just, I think the market is sort of rotating out of AI or de-risking a little bit.
Yeah.
I'll take it.
Okay, we'll see. And we'll see what the numbers say today. Is there a chance that, and look, I know that I don't want you to get in trouble with compliance or anything, but I ask you this every quarter. Can you hear anything from Nvidia today? And I'm going to have to interrupt you if we do get those numbers. Are you going to hear anything from Nvidia today, or could you hear that would make you change your view to at least neutral or buy?
It's pretty unlikely. My concerns are they're capacity constrained, and I think they're just going to limit the amount of upside that they can deliver to revenue for the next few quarters.
All right, sit tight. We're going to continue to await. Jay Goldberg is with us. Our Ed Ludlow is with us. Keep in mind, Tim, you mentioned earlier when we talked with our own Ian King 3 months ago, Nvidia, it beat. The stock went up a little bit, and then we saw it go down the next day. So, high in terms of expectations, although the stock has been beaten up here. Ed Ludlow, as we await those results, top thing you're watching out for here.
Well, it usually hits at exactly 20 minutes past the hour, so I'm a little bit on edge, and one wonders what's behind that, and I just state that as facts because I always go back and double check myself on the terminal EVT Go. Your last guest said that, for the outlook for the current period, April quarter, first fiscal quarter, that he was about $73 to $74 billion in sales overall. That's above consensus, but it is not as high as the most bullish estimates, right? And so we started this year with Nvidia and Jensen Huang at CES, and there was actually quite a lot more update in those on stage and in front of camera appearances than perhaps at the time we appreciated, in terms of them going beyond that original $500 billion forecast for calendar 26, for example. So, you guys have done all week, I guess. This is quite tense for the market because even the really good results may not be good enough.
Yeah, Ed, Ian made that point on our program because we ask, and it's different every quarter, but in recent quarters, this has been such a big event. But Ian made the point, look, there's not, we've heard a lot from Jensen already about demand. And so investors have that information. So yes, we'll get new information when the company reports its results and when we look at the expectations and commentary. But like you said, a lot's out there already.
Yeah, so basically this forecast for $500 billion, at the time it was over 5 fiscal quarters, and it was something that he said toward the end of last year in Washington, D.C. That was just for Blackwell systems and then Rubin systems, but it didn't take into account any revenue whatsoever from China. Then what happened was Bloomberg's Ian King asked Jensen at a press conference how that number was looking 3 months on. And what he said was, well, we're tracking beyond it, and that there may be some contribution from China. But right now, until the print hits, those are imponderables. We don't know. Well, we are pondering them, I guess. But they're not within the forecast, nor are they within what NVIDIA has actually stated. So again, I'm just kind of noodling here, guys. It's difficult. Bear with me with the audience. I don't think NVIDIA's reported late being later than 20 minutes past since 2023. So I don't know.
No, I think you're right to go there. We're looking at our live blog, which is the whole team here at Bloomberg
Except
getting ready
for Ed
for those
right
numbers.
now, who's with us.
But Sarah Fryer, our big technology team leader, she's like, NVIDIA earnings are usually up by 420, still waiting. I don't want to speculate, but it is unusual. And
this happened with Meta a few quarters ago, and it was nothing.
Yeah, it does happen.
Yeah. Can we talk quickly about margins?
Please.
Unless the numbers hit?
Yeah,
like it's interesting that everyone discusses margins. This is a company that has 75% gross margin, and we know that the economics of this industry are brutal. But something interesting has happened in recent months, which is that Nvidia owns more of the content of the server design. It's not just the GPU anymore. It's the little plugins around the GPU. And those may not be major drivers of revenue growth, but they have, it would appear, supported margins. But that creates some jeopardy for this print, because if you have a gross margin of 75% and the street, and I think your last guest talked about this is the profile in terms of their risk tolerance that they like of a company like Nvidia, they come to have an expectation. And so don't just look at the earnings statement, but when the CFO letter hits, look for the section on margins and whether there's an indication that 75% gross margin going forward is the norm, the status quo, so to speak.
I mean, it's an incredible status quo for a company in the hardware business. Jay Goldberg, I want to bring you in here on the 75% margins. I mean, we heard this from Ian King earlier. These are software margins, not hardware margins.
Yeah, I mean, strong agree with what Ed was just saying. Is I think the bigger risk to my thesis, or the bigger question mark this quarter, is going to be margins. Like, we have a pretty good fix on where, what their revenue is going to look like, few puts and takes, but the margin question is a big one. They make a lot of money from memory. They buy memory from the memory makers and mark it up to their full margin. That's a lot of earnings for them. Their competitors don't do that. And we all know about the memory shortage. Is Nvidia going to eat it? Are they going to be able to pass on the memory cost to their customers? I think that's going to be an area that the street's going to focus on a lot. Is how does their margin, their gross margin outlook look?
All right, folks, we are talking with our Ed Ludlow, and of course, we've also got with us Jay Goldberg over at Seaport Research Partners. We expected that NVIDIA would have had its results out about 7 minutes ago. We're still waiting. 4:20, as Ed reminds us, this is the time that they have reported over the last few years. So we're kind of glued to our Bloomberg as we speak, just waiting for it to cross. Having said that, as we await, the stock is just up about 0.4% here in the aftermarket. I'm not going to read anything into that, but we did see the stock higher also in the regular trade today.
Jay, I want to go back to you as we do await these numbers. You mentioned some investors having AI fatigue, and indeed we've seen NVIDIA in this narrow range really going back to just a few months ago. Explain more about how you're interpreting AI fatigue, because there are different companies are working in different spaces here. And NVIDIA, I think many would argue, stands in a league of its own given the demand that it continues to see from the hyperscalers.
So I think the issue is there are so many constraints across the industry, right? We're short on chip capacity, on packaging, on copper, on electricity, on substrates. All these things we haven't really thought about in a long time are all now very tight. And so that feels a little precarious. And then on top of it, you have a lot of questions about how these data center financing is going to work. There's a whole lot of financial engineering taking place on the construction side. And I think people look at that and they sort of think back to, past periods in economic history of financial engineering going crazy. And it just, I think in late last year, it sort of caused people to reassess how much exposure they want to AI. Even if you're not owning NVIDIA stock, you probably have AI exposure in your portfolio just because the build out is so spread out across the economy.
Oh, yeah.
Right. And so you can own energy stocks, you can own, power plants, chemicals companies, all of them have a fair amount of AI exposure to growth. And so I think that sort of the market repriced that a little bit. And then you have NVIDIA, who, like I said, just is sold out. And once you're sold out, there's no upside. Well, and that sort of stock has traded sideways for 6 months.
Ed, come on in here, because Jay got me thinking about constraints. Go ahead.
Well, the only other thing I wanted to point out is that, we got Salesforce. Cool. Salesforce earlier, right after the market, and it's down about 4%. And some of it has to do kind of feeding into the AI fears that are out there a little bit. They gave a lukewarm outlook for sales growth. I mean, it's NVIDIA and then it's the others, because it's just been an interesting market environment, Ed, as of late, in terms of that AI scare that's been playing its way in a lot of areas, in particular in those software companies.
Yeah, look, the difficult thing with all of this is that the data center that gets built tomorrow with the latest generation Nvidia GPUs. The software results of that are in the future, right? And the way that Jensen Huang has explained it previously is that imagine if they were a handbag company, bear with, and they said to the market, here are our next 5 seasons of bags. We're going to tell you in advance the next 5 years worth. Nvidia's argued for a really long time. It has told the market from the supply chain to its customers what it is going to do. And to its credit, it has delivered those generations of technology annually to a relatively accurate timeline. So that's why we track capital expenditures, right? Capital expenditures are a commitment for a calendar or a fiscal year in most cases. Nvidia is the main beneficiary of that. The problem with Salesforce and some of the other corners of the software market is that this is them showing the results of investments that they made in prior years. Mm-hmm. And those two timelines don't line up. And for investors, that's really hard. Again, I'm not an investor. This is just how it would be relayed to me, on the show or in the course of it being out there reporting, and you kind of have to sympathize with that.
I want to remind everybody, we are waiting for Nvidia earnings, usually reporting at 20 past. It's 4:31 here on Wall Street. And we're going to be speaking a little later about Salesforce, or maybe even more a little sooner if we don't get these Nvidia numbers.
There we go.
There they are.
Here we go.
All right. Go ahead, Carol.
Let's go to actually the outlook. First quarter revenue forecast beating estimates. The company's saying for the first quarter sees revenue of $76.44 billion to $79.56 billion. That is easily above the street estimate of $72.78 million. Let's go back to the fourth quarter data center revenue. That coming in better than expected, $62.3 billion versus the street estimate of $60.36 billion. Nvidia saying computing demand is growing exponentially. Fourth quarter adjusted gross margin, we expected 75%. We got 75.2%. Fourth quarter revenue coming in overall $68.1 billion, better than the street estimate of $65.91 billion. Tim, we're seeing that stock up now about 2.2% in the aftermarket.
Yeah, just to remind everybody where we are with these numbers. The company sees first quarter revenue coming in $76.44 billion to $79.56 billion. That beat estimates handily of $72.78 billion. As Carol mentioned, Nvidia CEO Jensen Huang saying in a statement, computing demand is growing exponentially. We also, fourth quarter data center revenue, worth repeating a beat there, $62.3 billion. The estimates for $60.36 billion. And that gross margin coming in above estimates at 75.2%.
Our Sarah Fryer on our live blog saying that shares are growing up on that data center revenue beat. Hey, Ed Ludlow, come on in. I know you're looking at these numbers. What jumps out for you?
Yeah, straight to the outlook. And by the way, I would have done the same thing. Go right there. Mm-hmm. Revenue in the fiscal first quarter, $78 billion, plus or minus 2%. A consensus was really high. But going into this, it's a very simple equation. There were many names from across sell side and buy side that said they wanted to see Nvidia beat revenues overall in the current period by the multiple billions of dollars, against consensus. And so one thing I would say to confirm something is that the fiscal first quarter, which is the April quarter, does not assume any compute revenue from China in the outlook, does not factor in any compute revenue of China. That, I guess, is something to check off the list. It was one of the questions we had.
I want to bring in Jay Goldberg from Seaport Research Partner. He's senior analyst for semiconductors and electronics. He joins us also from San Francisco. Jay, anything in here that confirms your thesis, or does it sort of go against the sell rating that you have on Nvidia?
Yeah, it's a good quarter. It's a good quarter and a good guide. It's above consensus. It's above my expectations. So good for them. We're still waiting to see a lot more detail.
What do you want to see?
I want to hear more how to talk about gross margin for next quarter. I think that's going to be in the CFO commentary.
Yeah.
Ed, jump in.
Do you have
Go
that?
ahead.
Yeah.
No, I don't have it yet, but it will be in the CFO commentary.
But 75.2% versus 75% expectations. Can you use that as sort of a guide for how the company could see first quarter?
On a basis points basis, look, margins are impacted by a number of things. It has been a sell side question on prior calls, the percentage of a server that Nvidia contributes to. And again, what's changed in the period is Nvidia starting to sell, for example, CPUs as standalone product. And that was a part of the Meta deal that was included. They talked about CoreWeave being an early user of CPU as a standalone product. How does that impact the margin profile going forward? But yeah, I mean, what they do is they own more of the server, and that has been one of the ways in which that they've got margins to where they are, and clearly being 0.2% above, where the hopes were is not a bad thing.
Yeah, I'm looking at that CFO commentary. As we know, revenue expected to be $78 billion, plus or minus 2%. And as you correctly pointed out, not assuming any data center compute revenue from China in their outlook. GAAP and non-GAAP gross margins expected to be 74.9% and 75% respectively, plus or minus 50 basis point. Inclusive of a 0.1% impact from stock-based compensation expense. Just looking at what else we have here. Operating expenses, GAAP and non-GAAP operating expenses to be approximately $7.7 billion, $7.5 billion respectively, including that's inclusive of $1.9 billion of stock-based compensation expense.
A headline getting my attention is Nvidia says that hyperscalers were just over 50% of 4Q data center revenue. Jay Goldberg, I want to repeat that headline for you. Hyperscalers were just over 50% of fourth quarter data center revenue. Is that a sign that Nvidia is diversifying revenue? Who made up the other half of data center revenue? Is it automakers? Who's buying?
Well, I think that's one of the most interesting things that's taking place with Nvidia is they're not just reshaping the semiconductor industry, they're trying to reshape the cloud computing industry as well. And that's why we see all these neoclouds getting investment from or support from Nvidia. Nvidia would much rather have 100 neocloud customers than 3 hyperscale customers.
Of course.
And they're doing a really good job of creating that, willing that into existence.
So those other customers, Ed, come on in here. Those other customers are like the CoreWeaves and the other neoclouds?
Yeah, I mean, what is still important and is fact is that obviously the vast majority has been the hyperscalers plus Meta, right? And so they've wanted to kind of switch between a story, what they used to call an AI factory. At first, an AI factory was an on-prem data center that enterprises and maybe some of the neoclouds would operate themselves. Now an AI factory is what you define any data center that's running AI workloads in. So they have chopped and changed between that story, but its origin was that they wanted to go beyond the hyperscalers to have people own their own infrastructure for AI workloads if they were, say, a software company or an enterprise of a slightly different size.
It's interesting. I'm looking for supply constraints, and they seem to say in the CFO commentary, I'm seeing it in terms of gaming. They say we expect supply constraints to be a headwind to gaming in the first quarter of fiscal 2027 and beyond, but not so important, right, Ed? I mean, we want to really just see if that's a problem in the data center area.
Sadly, my history with Nvidia, before coming to Silicon Valley and covering the data center thing was gaming, and it's now such a small piece of revenue. I mean, Jay can jump in, but really, it's not where anyone's looking right now. There is some discussion later on as it relates to the balance sheet and cash flow on things to do with supply, but you're right that what they're basically saying is that was the gaming was the segment that was impacted, and I don't know that is having any effect really on how we see the stock trading in after hours.
Well, Nvidia shares up 3.4% right now, and in fact, we're seeing Broadcom, TSMC, and Micron shares follow Nvidia higher. Jay Goldberg, come on in here and talk a little bit about the broader repercussions of a print like this outside of Nvidia. What's the signal that it sends, not just to hardware makers, but to the entire market?
I think there are always concerns about how long the spend is going to keep going. And we certainly had some positive data points about that 2 weeks ago when the hyperscalers reported, Facebook reported. They have very strong CapEx numbers. This just continues that trend. I don't want to say it's a rising tide that lifts all boats, but it is $600-700 billion in CapEx this year. And that's going to spread across the entire ecosystem.
No, and I want to go back to, and Ed, I totally get gaming not important, but I was looking to see if there was any supply constraints in the rest of their universe. And I just thought it was kind of interesting that I haven't seen anything along those lines. It was just in regards to gaming. So is that a good sign that we haven't seen anything that the company has said so far in terms of supply constraints for the rest of the business? Or I don't know, is it not that important?
Well, I leave it to the analysts to model money left on the table, if there were any, so to speak. But like, given the outlook in terms of sales and where it came in relative to consensus, Nvidia. It's an enviable position to be in, right, where demand exceeds your ability to supply anyway. But going back to that 5-year handbag analogy of a few moments ago, the other argument that Jensen Huang and Nvidia have made quite consistently is that if you tell your suppliers what you plan to do 5 years in advance, then the rest of the supply chain can help prepare with you and keep up. And recently that's been most difficult in memory, but memory shows up in pricing. And if you're Jensen Huang, I'm sure you can make a phone call and make sure that the corresponding high bandwidth memory that you need is there or thereabouts.
Quick check on NASDAQ 100 E-mini futures here in the aftermarket, and they're up about 1.8%. So we're certainly seeing a lift to the overall market. Jay Goldberg, come on back in. What's top of mind when we get to this conference call in terms of what you want to hear? I know we talked a lot about margins earlier, but what is it?
Yeah, I think this margin stuff is important because what I'm sort of reading between the lines is they had to negotiate pricing with the memory makers, and the memory makers have the most leverage they've had in a decade, and we don't see any impact on Nvidia's numbers. Compare that to pretty much any other electronics company out there today, which is warning about memory. I'm sure Nvidia's feeling some of that, but the fact that their gross margins are guiding to at least in line tells me that they're just going to price on those memory increases to their customers, which is a testament to their pricing power, their market position.
Jay Goldberg. Jay, we're going to have to leave it there. We're going to give you time to get ready to jump on that call. Jay Goldberg is Senior Analyst, Semiconductors and Electronics for Seaport Research Partners. Once again, Jay, the only analyst tracked by the Bloomberg Terminal who has a sell rating on Nvidia. Ed, want to give you the last word. You've spoken to Jensen Huang many, many times. What's a question that you would have for him on the earnings call tonight?
Yeah, ultimately, it just always comes down to a projection of confidence that all of the stories we've been over in more than the last year are still intact. That the great build out of AI infrastructure is early, that they have long horizon visibility into what's going on. All Nvidia can control, I suppose, is the roadmap to go from one generation of compute to the next. And so they talk about in the CFO document margins being supported by the ramp up in Blackwell and mix of new products. Well, when does that mix change? When does Vera Rubin really kick in and then go beyond that? That's kind of how the street would look at it, I think.
All right, we're going to leave it there. Ed, we know you're busy as well. Ed Ludlow, thank you so much as we awaited those numbers and helping us break them down. Co-host of Bloomberg Tech, of course, on Bloomberg Television. Catch it at 11 a.m. Wall Street time, Monday through Friday.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Nvidia shares continuing to trade higher. A couple of headlines also crossing that we want to bring to you. Nvidia says it's secured supply to meet demand for several quarters. So we talk about supply constraints often when we're talking about Nvidia and the AI demand. Also, Nvidia saying the United States granted a license to ship H200 chips to China-based clients. So they've granted a license for specific China-based customers. The U.S. license is to ship small amounts of the H200 to China. So we were looking for some clarification on its business in China, something that they've certainly been looking for.
We got a great Bloomberg Intelligence roundtable. Mandeep Singh is Global Head of Technology Research for Bloomberg Intelligence. He joins us here in the Bloomberg Interactive Brokers studio. He covers Nvidia, he covers Snowflake and more. Also, Anurag Rana is Senior Technology Analyst for Bloomberg Intelligence. He joins us from Chicago, and he covers Salesforce. So we're going to talk software, we're going to talk hardware. Mandeep, I want to start with your reaction to Nvidia. It was a beat. It was, a very good quarter. Your reaction to margin and what is actually holding up margins here? Because 75.2%.
No mention of any impact related to memory costs, which is surprising. And
why is that surprising? I know memory costs have gone up, but Nvidia is such a big company. Don't they have pricing power?
They do, but
or purchasing power rather.
They clearly did a great job in terms of securing that supply, and they don't have the premium. They don't have to pay the premium that everyone else has to pay on the hardware side.
They said secured supply to meet demand for several quarters. What's several?
Well, I mean, in this case, at least...
Like the Fed. This is like the Fed.
But they're saying that they've got it. That's a good thing.
They have got it. And they're guiding to, mid 70% gross margin for next quarter as well. So clearly, memory, not, an impact at all in terms of the margins. The thing that is clear is they are selling, to existing customers, not just GPUs, but systems. Mm-hmm. And that's the big difference between an Nvidia and an AMD. AMD wants Meta to use their chips and integrate it.
Right.
Nvidia is actually selling to their customers entire systems that have higher ASPs. They are helping them reduce the token costs. And that's where the customers don't mind paying that extra, premium that Nvidia is charging, because overall the total cost of ownership is lower than if you were to standardize on any other chips. And that's what's reflected in their print is, look, their customers see the value.
So well done, Nvidia, right? By doing the whole thing.
And the Blackwell architecture, that's really taken off. I mean, all the concerns around the migration from Hopper to Blackwell, I mean, they just proved that Blackwell it will be probably a bigger product in terms of their chip architectures.
Does this in your mind, I mean, I always feel like you're like the calm voice of saying the AI spend is still happening, like everybody relax a little bit.
It's accelerating now.
But it's accelerating. That's what you're getting from this.
I mean, look at Nvidia's growth in the last fiscal quarter. It was around mid 60%. They're pointing to 77% growth in their fiscal 1Q. So that goes to show, and the proof point you can see in the hyperscaler capex. The hyperscaler capex seems to be going up as well. So it's underpinned by healthy fundamentals. We know why NVIDIA's top line is accelerating.
Right.
Because the capex seems to be accelerating. And all this points towards more inferencing, more demand for AI compute. And we are hitting that phase where it's not just, about training or whether it will happen or not. It's happening.
So the ROI, the usage, right? We're seeing it.
The usage is happening, and companies are consuming the compute.
Yeah.
It's going to get reflected in the cloud revenue next quarter. It's going to get reflected in all the possible forms of where inferencing will show up.
We're gonna bring Anurag in a second and talk Salesforce, because I think that's a good transition to talk about what companies are doing with AI and the message, at least, that Salesforce is trying to make with agentic AI. But before we get there, Mandeep, I do want you to weigh in on what Carol mentioned earlier about the China business.
Yeah.
H200 shipped under new programs subject to a 25% tariff. Nvidia discloses U.S. government in a 10-K filing, granted license by the U.S. in February of 2026. The U.S. license to ship small amounts of H200 to China for specific China-based customers. What does our investing audience need to understand about what it can sell to China and the impact on that financially?
I mean, China used to be mid-single digit percentage of NVIDIA's overall data center revenue. And Jensen has said China is about a $50 billion addressable market when it comes to, chips. Mm-hmm. And so the fact that they're allowed to sell something now to China doesn't mean it's going to grow at the same rate as their overall top line, which is, 77%. And that excludes the China number. But it's all incremental revenue. And this print shows there is just insatiable demand for NVIDIA's chips, and whoever can get it will buy it. So it's just a question of whether NVIDIA is willing to sell it to them or not.
All right, so let's go to Salesforce. We do want to bring in our Anurag Rana, Senior Technology Analyst at Bloomberg Intelligence. He's in Chicago. Shares of Salesforce, Anurag, are down about 4.5% in the aftermarket. Some of the red headlines that we crossed on the Bloomberg company in terms of the outlook sees first quarter revenue of 11.03 to 11.08 billion. That's above the street estimate of 10.99 billion. Also increasing its share buyback authorization to $50 billion. Walk us through, because this company has certainly been under a lot of pressure. It's down about 50% since late 2024.
So there are two things that are happening right now. The first is, given so much spend going into AI, the non-AI spending is the one that's under pressure. And that is hurting companies like Salesforce, Workday, Accenture, and so forth, because companies have, or the clients don't have that much money to spend in terms of how they're allocating AI spending versus non-AI. The second big piece right now is the market's extremely worried about software companies getting disrupted by all the model providers and all the AI native companies. So Salesforce are getting hit by two different ways. But the results, frankly, they were, I wouldn't say they were disappointing. I would say they were stable to in line in terms of what they were saying they're going to do. So from our side, it is just going to take some time to sort out.
So Anurag, the question I think a lot of people have, excuse me, about a company like Salesforce, and we could go through any other software company, not any other, but many other software companies, and ask you the same question, is about the threat from artificial intelligence. And Mark Benioff was very clear in the press release to say that this is a company that has relaunched. I don't have the exact wording in front of me, but relaunched as an agentic AI company. Is it really under threat? And specifically, what is the threat from Claude, from Anthropic, or from OpenAI that investors are so worried about? And is it warranted?
So the question is the answer to is it warranted? I think it's going to take some time to play out, because if the models get really smart, then why do you need a manufactured software like this? That software can do a lot of what you need to do in terms of managing your sales force or customer service. Now, the question is, in our view, when a company like Salesforce is there are a handful of their products that they have that they sell into the enterprise, whether it's customer service cloud or sales automation cloud. Those are the ones I think they have a little bit better position of not being disrupted, but they have other visualization tools or some other smaller products that may not be the ones where anybody would pay for it. So I think there is a lot that needs to be done from Salesforce in terms of adding more AI capabilities to its core product, and not be, change the narrative around it.
The narratives have been so interesting on AI, as you really well know. Looking at names like Snowflake down about 1.3% here in the aftermarket. We're talking about Salesforce and that stock, just a real quick rehash here on the Bloomberg. We're seeing that stock still down about 4.5% here in the aftermarket. And then, of course, we've got Nvidia up about 2.3%. You put out some great research this week, Anurag, you and the team, about the haves and have-nots in AI disruption. What do we need to know at this point, especially when everyone says, folks, we're still early in on this. We don't really know how it all plays out.
I think that's the most important thing, is we are very early in the inning. But at the same time, when people are worried, they'll entirely sell the entire sector. We have seen that numerous times. So when we looked at this thing, the entire team worked on creating a framework of, when we see a company, does it have high market share? Does it sell to very large companies versus smaller companies? Is it a platform? Is it a system of record? All those things takes into account, kind of the history of a company. So let's say a company like SAP that's been around for 50 years, you use it for your core accounting reasons, supply chain. I think something like that is better entrenched than a very small company that's probably doing, one particular function or selling only to the small and medium customers.
Hey, final question here on Salesforce, just going back as we watch this stock down 4.6%. Top of mind, I know I always ask you guys this, but when the call starts with the company and the C-suite and analysts and investors, what must be asked?
I think the biggest thing is going to be what are you doing to change the narrative around them being disrupted by AI, and how are they adding more AI capabilities across their entire suite?
All right, love it. Anurag, thank you so much. Anurag Rana, his research, certainly on the AI world and also on Salesforce. We'll be looking for that later on today. Anurag Rana, Senior Technology Analyst at Bloomberg Intelligence out there in Chicago.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Geopolitics, some certainly mentioned in President Trump's speech last night. The president, in his State of the Union speech, focused on the economy, and his view included statements about what we just talked about with our own Mike McKee. Inflation is plummeting, he said. He said incomes are rising fast. And he also talked about Friday's Supreme Court decision that struck down the president's global tariffs.
An unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country, both economically and on a national security basis. I introduced the great health care plan. I want to stop all payments to big insurance companies and instead give that money directly to the people. The roaring economy is roaring like never before. Our country is winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. Our nation is back. Bigger, better, richer, and stronger than ever before.
All right, everybody. That, of course, was President Trump last night at the State of the Union address. We should point out his speech was criticized by Democrats, including U.S. Senator Elizabeth Warren, who said he had nothing to say about issues like capping credit card interest rates and making childcare more affordable. Let's get a policy view of last night's address from President Trump and what policies and actions that may still be coming that could impact the future outlook for the United States. Great to have back with us Libby Cantrell. She is Managing Director, Head of Public Policy for PIMCO. She joins us from PIMCO's offices right here in New York City. Libby, welcome back. Great to have you here. Let's just talk broadly about this speech. What stood out for you, and what do you think should stood out for the investing public, American citizens at large, the business community? And I think about American citizens who still think about this affordability issue. So what stands out on those fronts?
Yeah, nice to be with you. I mean, this was there was more performance here than policy, we would argue. There was a bit of a spiking of the football in terms of really sort of reinforcing some of what President Trump has perceived as victories, the one big beautiful bill, closing the border, some of the other kind of immigration policies that he has pursued, and also some of the foreign policy wins that he is characterizing at least as wins. So I think that this was in some ways a lot of kind of red meat for his base, as these addresses oftentimes are. Now he did talk about tariffs, as you mentioned. I think that to the relief of many Republicans in that chamber, he did not call on Congress to take a vote on tariffs. I think that is something that probably would have failed anyway, but also would have been politically difficult for Republicans. But by and large, this was, I think, a pretty typical State of the Union address in many ways. It was, again, more of a rehashing of sort of the political wins and pretty light on policy details and light on kind of a roadmap, I think, for a lot of congressional Republicans heading into the midterms.
Yeah, I'm really glad you went to the midterms, because that's exactly where I want to go and try to understand from you if it actually moved the needle on how people could vote come the midterms, because that's what Republicans and Democrats are focused on right now.
I think it was a bit surprising that there were not arguably more policies that he'd actually highlighted in other speeches and other venues, highlighted in last night's speech. He did talk about this ban that he wants Congress to codify in terms of institutional investors investing in single-family homes, but he didn't really talk about some of the other proposals. To Senator Warren's criticism, she remarked that he did not talk about, capping credit cards and what have you. Now, I don't think any of those will actually get effectuated into policy. Those need Congress anyway. But in terms of really leaning into that affordability sort of framework and theme, he didn't really give Republicans all that much. Again, I think what his hope is, and what a lot of Republicans hope is that the voters' sentiment around the economy will be different come this fall. Now, of course, that one big beautiful bill, people will be getting refunds on average, $4,000, about $1,000 extra in terms of a refund, relative to last year. So I think the hope is that there will be more optimism and that folks will have a different perception of affordability. And so maybe he won't need to lean into some of those policies. I think that was maybe last night was maybe a tell of that thinking.
Libby, he did focus on the stock market, certainly something we, focus on here at Bloomberg, but, talking about how good that was, right? And wealth created and good for our investors. But is that always a good read, or is that even a good read on kind of the state of the U.S. as a nation and as an economy?
Well, I think there are lots of examples where, voters have, one view of things and the stock market is doing something different. I think if you talk to President Biden, I think that was one of his frustrations and his economics advisor's frustrations is that actually the market was doing quite well and the economy objectively was doing pretty well, but voters just didn't feel it. So perception is reality here, and going into these midterm elections, again, I think there is a hope that voters will feel better about things. And I think, to President Trump's credit, in terms of the Trump accounts that were codified into one big, beautiful bill, this idea of broadening that out and giving folks access to retirement accounts who may not have access to traditional 401k plans. So I think he is trying to tie the stock market performance to kind of everyday people's lives. However, we'll see. There's a lot of distance between here and there in terms of getting that actually effectuated into policy.
I think a lot of folks think, what a great idea, right? If we talk about wealth creation, this is a great way to do it. But I do also think about, how do we pay for all this stuff? And when do we think about kind of the fiscal house and when that's going to matter? I know go back a decade or so, and it was in every conversation I talked about here at Bloomberg, or even longer than that. Then it went away, and now it's back again. So I just think about, when do we have to when does that all come home to roost, or is it already?
Yes, I think if you contrast this speech with the speech last February, where President Trump was really leaning into this idea of DOGE and cutting federal spending and talking about the deficit, there was no mention of the deficit last night. And in fact, he talked about how important Social Security and Medicare were and how those would not be touched. As you all know, those are important programs, bipartisan, wide bipartisan support. However, they're both very expensive as well. Our view here is that while there is no kind of immediate fiscal reckoning, I mean, the bond market, as you all know, hasn't necessarily, the bond vigilantes haven't necessarily come out here and discipline Washington, but it's probably a question of, when, not if, that there will be an inflection point where members of Congress will have to actually do something in terms of sort of the fiscal trajectory. It doesn't look like it's close. There's not a lot of political appetite to increase taxes or reduce spending. Our view is this sort of 6 to 7% deficits as a percentage of GDP. There will be a limit to that. And whether it's the bond market that is imposing that discipline, or when it's, Social Security trust fund starting to kind of go bankrupt, so to speak, which is expected to happen in the early 2030s. So we do think this is again, a question of when, not if, but it's just the when is probably not, under President Trump's term, at least as, if what the market signals are saying now.
Libby, you've seen different market cycles, different economies under different presidents. We've talked about this a little bit earlier with our own Mike McKee. How do you describe the Trump economy? Is it a good one?
Well, I think that, and again, there is a limitation to how much a president can actually impact the economy. So this is, for better or for worse, presidents, President Trump included, they like to take sort of credit for when things are going well, but also to sort of avoid any of that, blame when they're not. I think we would characterize this economy, this sort of K-shaped, two-speed economy is quite real. Where if you just look at the components of GDP, obviously, AI-related CapEx fueled a lot of growth last year, as did the high-end consumer. I think there is a hope in 2026, and again, this is what I think Republicans are banking on, that the breadth of that economic growth is broader, and that this sort of the consumer at the kind of middle to lower end starts feeling better about things and starts participating in the economy. But if the economy just is predicated on kind of AI-related capex and the high-end consumer, that makes for a relatively fragile economy. And if you sort of see any kind of wobbles in the labor market, for instance, that could have maybe a non-linear impact. So, I think it's a stronger economy. It's been a resilient economy for sure.
Right.
But again, I think Republicans are hoping that you can sort of broaden out the source of that growth, and that they'll actually be rewarded then, come November.
But that AI spend, the impact on the market, sending it higher, and then, the wealth created among affluent spenders, that is something that Greg Dacco has certainly talked about a lot for us from EY Parthenon, and the importance. And if that starts to come undone, that could be problematic, Tim.
Hey, Libya, I want to shift gears a little bit and talk geopolitics, because ahead of the speech, the president, and he's gotten quite a bit of criticism in recent months, even from within his own party, about focusing too much on geopolitics. And while he didn't talk too much about geopolitics, what he did frame last night was, Venezuela and the ouster of Maduro, that being a win for oil companies and Americans who are getting oil and will get oil from Venezuela. And just now we are learning that Cuba has shot 4 dead in a clash with a Florida speedboat. That's just breaking news just in the last few minutes. I'm wondering about geopolitics, though, and the political risk for a president who came in and said, no more on a platform, no more foreign wars, wants to end wars, for focusing so much on geopolitics within his first year in office. Is that alienating some of his base?
I think it's confused some of his base for sure. As you said, that there is a wing of the sort of Trump base that is more isolationist. I think those folks thought that President Trump would be sharing in that view. He obviously talked about ending the war in Ukraine. That has not happened. He's talked about bringing kind of peace globally. I think you could sort of quibble about whether that has actually been true or not. And then to your point, he has focused on some of these more specific operations. Now I think Venezuela, the way that they would characterize, the White House would characterize this is an extradition, kind of a high-profile arrest, if you will, that required a lot of resources of the U.S. government, but was quite different from regime change. We'll see kind of how that plays out. But I do think, Tim, you're right to sort of focus on this politically, because midterms are all about turnout. It's not about persuasion, right? You need to get your base turned out. You need them to get excited. Whereas a general election, it's about sort of persuading folks who might be kind of on the fence. Again, midterms all about kind of your base turnout. And if your base is at all, feeling maybe a little bit less enthusiastic about you, they may not turn out. And so I do think this, we'll sort of see how this kind of movie plays out, but you could see President Trump, maybe kind of be forced by his own party to be less focused on these issues, because they just doesn't have sort of the galvanizing effect as the kitchen table, gas and grocery issues you typically have. The last thing I'll just say, though, is I think President Trump was quite clear about what his framework was he was using yesterday as it relates to Iran. He definitely did not close the door on potential intervention. He also didn't necessarily endorse that he was going to do this either. So he was using sort of this clear framework about about Iran's ability to develop a nuclear weapon and what have you as kind of a litmus test. So I think he's trying to be more clear about what it would require to engage. But again, politically, he may be forced to back off this as we get closer to the midterms.
Libby, going back to the affordability issues, we know President Trump and Vice President J.D. Vance are hitting the road tomorrow and I believe on Friday to kind of test their affordability message with voters in Texas and Wisconsin this week. So things like, obviously the tax cuts that are already part of his big, beautiful bill, these new savings accounts for kids, maybe banning of institutional investors from buying homes, although we didn't get anything more on that. Are there policies or clarifications of policies or implementation of policies that are likely to come leading up to the midterms that you think kind of improve the affordability issues for those who will be voting?
I think the reality is that even if President Trump wants to see some changes it's going to be very difficult for Congress to get anything done before the summer, which is really the de facto end of this Congress. That's when they will adjourn for their sort of summer, traditional summer recess, for them to really go back to their districts and to campaign. So in terms of the runway to actually effectuate policy, we are talking about a very short one, to July, basically. And we don't see Congress moving. We don't see them passing another tax bill, another spending bill, another bill that prevents institutional investors from buying single-family homes or what have you. There is a housing bill that they may be able to pass both chambers and get signed into law, but that is likely going to be it. So I think kind of for all intents and purposes here, Trump will have to lean on those policies he can effectuate unilaterally, which is the agencies buying, agency MBS. That is one thing that he did not talk about in his speech. It's kind of for us, bond nerds over here. But we do think that's actually, that and deregulation, those are two things that he can and will, we think, continue to lean on to help improve at least mortgage rates and sort of the rate environment in general, and hope that will actually trickle down to some kind of the perception again of affordability among voters. But outside of that, we do not expect Congress to move, really, period, between now and the midterms.
All right.
I don't recall seeing mentions of agency MBSs on the prediction markets.
Wait, that's
yesterday.
when they all stood up. Remember?
Okay.
They like the...
Exactly. The only bipartisan moment we saw was at our agency MBS.
Bringing the parties together. Libby Cantrell, you rock. Managing
Thanks so
Director,
much.
Head of
Appreciate
Public Policy over at PIMCO, joining us right here in New York City.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Cuban forces killed 4 people and wounded 6 others who were traveling in a speedboat with Florida tags after they opened fire on the island's border patrol, the government said. With us is Dan Cancel, BN Bloomberg News Miami Bureau Chief. He joins us from our Miami Bureau. Dan, we're trying to understand what exactly is going on, who these individuals were and what they did, and we're hoping you can shed some light on it. What do we know about the 4 people who were killed?
Yeah, very little. The source of the information as of now comes from the Cuban military. As you mentioned, the statement dropped about an hour or so ago, where they mentioned that this boat with Florida registration, carrying 10 passengers, ran into this incident conflict with the Coast Guard, with 4 dead and 6 injured. They haven't identified the nationality of these individuals, obviously released any names. And on the U.S. side, we don't have any information, either kind of corroborating that information or providing new details. So as of now, it's a bit of a sit and wait to see if the Cubans release, additional information. But obviously, there's a big backdrop here, right, to what's happening between U.S. and Cuba relations. So.
Let's talk about that, because we did know, I think earlier today, the U.S. announced that it would ease restrictions on Venezuelan oil exports to Cuba's private sector for humanitarian reasons. We know Canada has announced an aid package for Cubans because of President Trump's oil blockade. So kind of where are we? I mean, tensions are high right now between the U.S. and Cuba.
They are, yeah. I mean, since January 3rd, when Maduro was captured in Caracas, obviously Venezuela was the biggest ally and benefactor for the Cuban regime, and so taking those oil flows and that support away from the Cubans has created a lot of tension, and obviously the situation on the ground in Cuba has deteriorated in terms of energy supplies and other sorts of supplies. So the U.S. has not come out with a real clear strategy on what they hope to accomplish in Cuba, but clearly there are some new headlines about supplying the private sector with fuel so trying to kind of go around the regime in helping the people and avoid a bigger humanitarian crisis.
Yeah, I mean, again, the information we have, Dan, on this is very limited. And you make a good point about the backdrop of this and what it means in the context of everything that's happened in 2026 thus far. That said, there has been reporting around where this boat at least was registered to. What can you tell us about that, and if that offers any indication about who was actually in the boat?
Yeah, listen, so far, all we have is a registration number, which, curiously, the Cubans did provide in their statement. It's not returning anything solid as we look into that and report on it. So you can kind of imagine this could be people out for fishing, but apparently they were armed, right? So maybe not. We could be talking about people trying to bring supplies, to Cubans, whether it's food goods, whether it's illicit, right? Kind of smuggling operation. So it's really kind of up to our imaginations here, in terms of what could have been happening, and the fact that the U.S. Coast Guard has not issued a statement or verified this is something that we're obviously waiting for. Right?
We do have U.S. Representative Carlos Jimenez out on social, and he's saying the Cuban government must go to, quote, the dustbin of history. He posts this after Cuba clashing with the U.S. speedboat, and he calls, quote, again, his words, murder, Cuba killing of U.S. speedboat crew. But as you said, we don't know a lot. We have to be very careful. The devil is always in the details, and we are awaiting some kind of statement from the U.S. government, correct?
Absolutely. I'd say he's among the more hardline of the Cuban Americans in Congress, and so it's not rare that he'd have that rhetoric today. And again, we need to figure out exactly who these people were. From the U.S. perspective, are they U.S. citizens? Are they Cubans? And so we just, there's so many things we need to figure out here. I think the one thing, again, is, what's changed recently is that the private sector in Cuba is now authorized to import fuel, right, for the first time. And so, could people be running big jugs of gasoline or diesel, right, across the less than 100 miles that separate, right, the two countries? So again, it's just a theory or one possible scenario, right? I just don't know.
One more line from Representative Jimenez's statement on social. He's calling for an investigation of the Cuba incident, but we would all concur that we need to know some more in terms of the details and find out exactly what happened before we can move forward. Dan Cancel, thank you so much. He is Bloomberg News Miami Bureau Chief, joining us from our bureau in Miami. We're going to kind of stay on, I don't know whether you want to call this geopolitics or just tensions, global tensions, and just finding our way forward when it comes to relationships between countries, but also throw things like technology and military, and it kind of all gets interesting and a little tough.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.